Hello, future investors of probably one of the greatest company in our civilization, Tesla. That's what we will gonna talk about today. So welcome back to our channel. All of the Wall Street Station channels fans have had a real patience when making this 1 week off from broadcasting, but we are back, and today we are heading headfirst into one of the greatest in terms of also volatility stock, and let's be honest, also very nerve-wracking topic in the world of finance. So the possibility of investing in Tesla after this type of a V-shaped type of trajectory move. So I know what you're thinking right now. After Tesla dropped, everyone was betting and blaming Katie Wood for its possibly shrinking portfolio of Tesla stock. But right now, we are finding the situation in like a blessing in disguise, and right after this rebound, we might head next for the next highs to come. But is it the right time to buy Tesla stock right now when it had such a significant move back in the beginning of November? So well, folks, that's exactly what we're gonna explore today. So I'm very glad you decided to pop in, and from now on we'll have our transmissions systematically. So let's head on. So that's the topic for today. What's next for Tesla stock? So we're gonna just go at first throughout the revenue distribution. So there will be fundamentals right after earnings, and some of the commentary to this, what may come of next, and technicals along with positioning of biggest players. So in order to find the right entrance point for you, the investor, and we will end up with option chain and the sentiment and final thoughts. So in summary, Tesla has been founded in 2003 by couple of engineers entering the electric vehicle market with the goal of making electric cars more accessible, and they started with high-priced, low-volume vehicles. I will just change my cursor for the laser pointer to make it more visible. So the most affordable luxury cars was the Model 3, Model S, and Model X, and right now the latest models, Model 3, sorry, so I meant the beginning there was a Model S and then Model X, and right now the latest models such as Model 3 and Model Y are aimed at a higher volume market. So among the this breakdown of revenue, we can find that automotive sales is aiming at 4.5%, automotive regulatory credits 93.7%, automotive leasing minus 21.3%, energy generation and storage there's around half of its revenue, and services and other comes to the 31.7%. So we can find this there's diversity of income, and among the most important ones, we definitely have a automotive sales. So Tesla stands out from traditional automakers by selling vehicles directly to consumers through their website and company-owned stores, and they operate nearly 400 stores and galleries globally. So right now the company is known for its vertical integration, producing many components in-house, which is unusual in the automotive industry, and that's why possibly this company have such high valuation with a very high PE ratio. We are jumping right now into some of the most important data, and among them there is a breakdown of adjusted EBITDA that's right now in a plateau, revenue that's kind of a meandering along this level of 24,000, and capex that's right now at the unchanged level. However, it gives us a valuable perspective that right now we are still somewhere where the situation may get eventually better, but still giving many hopes for the better times to come. Another things that is ripping through every mind of investors in Tesla is vehicle delivery. So it has slumped in the October overall the Q3. So there was also the major backdrop in September, but right now what's thought-provoking, whether we will just have such slide and then rally forward. Many analysts are just head-scratching themselves whether that might be possible in such a difficult economic circumstance. But we have many of the economists that highlighting that still is it's a eventuality that the investors shouldn't grind with the teeth. Anyway, so any red alerts right now? Let's find out. That's the most important elements that I found in an income statements and other type of data. So we can find right here the cash flow, free cash flow is right now at around 1,000 units. So in millions, we can find that it's in a kind of a stagnation right here, but operating cash flow is rising, so it's something that we shouldn't worry about. In terms of gross margin versus history, that's something that's also get us to what this current condition, economic condition, stems from, is this the necessity to just decrease the prices of the products of Tesla. So even though the Tesla is not just the core component, having many income streams, the lowering price of its most recognizable models of car is really putting the Tesla stock into this kind of a substantial margin in terms of its future trajectory of development. If such economy will have more headwinds, yet in 2024 we may have even a worsening outlook. And even though the rest of it with net margin percentage and ROI and ROIC is having a good times, and there are some things still to improve. In terms of the next one, we can find right here that we have net assets from acquisitions. So it's eventually getting better after a major slowdown, so it eventually trying to work out. But what's inevitable in terms of purchase or sale of investments is that will eventually rebound and just jump over the surface. So it looks like in terms of the income statement, we have a lot of things that is just showing us that Tesla is heading into a right direction, but Elon Musk still have some hard nuts to crack. So we are right now heading into the eventuality of where the Tesla may eventually end up in a year. So it looks like we are kind of a decently evaluated with around the valuation that should be visible in a year from now, but still there might be a zigzag pathway in the next quarters of 2024. In terms of earnings, we can find that earnings and revenue should skyrocket somewhere in the middle of 2024. So we do expect that that economies will increase its Tesla's revenue projections right after this election type of period. Since 2024, second, third quarter will have a possibly improving type of a data coming for this quintessential type of a breakdown of revenue and earnings. In terms of P&E, we can find that Tesla is an outstander, but it's absolutely fine with what Katie Wood finds that Tesla is becoming the next possible most important company in the world in terms of AI development. Therefore, the valuation is somewhat skyrocketed right now, and to some of analysts may seem too high, but anyway, right now there are not many things that may send shockwaves. Tesla is delivering its promises, and that's the most important for investors. So as a reminder, we are right now live, so if you have any questions, you may just pop some burning of them right in the comments section below. In terms of the updates, Elon Musk said that they are aiming to make 200,000 units of electric pickup truck, Cybertruck, per year. So the company had earlier said that Tesla had the capacity to make more than 125,000 Cybertrucks annually, with Musk adding there was potential to lift it even to 250 hundreds in 2025. So deliveries of the much awaited pickup truck will begin on November 30, nearly 4 years after it was unveiled by Musk at an event in Los Angeles. So that's what is overheating in some terms the moods around the stock, is that may eventually push the valuation of a stock to new highs. That's what investors are literally counting on. However, I have also the question for you whether not everything is priced in already, and when we have a kind of a major sell-off right after the Cybertruck will eventually hit the assembly line. So many financial analysts and investors are viewing Tesla as a SaaS company that may thrive with even though the economic uncertainties are right now rippling through the economy. However, the most reasonable point of view is that Tesla need the stability of macroeconomy, and otherwise hopes for better future will be dashed. All right, so Tesla, for the next element, Tesla wins legal battle over autopilot, asserting driver responsibility. So at the crux of the problem is a capital intensive sector investing in an unproven EV strategies amid a world of rising costs, lower prices, rising rates, and slower demand. So what investors seem to be waking up right now is that idea of the tens of billions of dollars invested in EVs may be valued destructive rather than value accretive. And what we can find right here is that with that all of introduction is what hopes for Tesla are. So with this legal battle over autopilot, we can find this significant legal victory, putting Tesla in a significantly higher place in terms of its AI type of a distribution of solutions for the auto industry. So right now the things are getting from from good to even better, and Tesla is right position for this AI type of a boom of autopilot type of a industry to thrive. Right now, Tesla is in the forefront of the innovation, and we can find it all around. In terms of macro, as we do know, the Tesla is not really performing right in a vacuum. The Federal Open Market Committee voted unanimously to leave benchmark rate unchanged for a second straight meeting. That was the latest meeting, and right now we can find that we should eventually have a relief in terms of the stock market, even though the bond yields are at very high level. We can find that this pause after this very rapid rise of interest rates may eventually loosen a little bit this tighter credit conditions, at least by mere sentiment. So statement of the Fed right now saying that there is a strong pace of interest rates and rise, and they don't wanna break anything right now, even though it might be eventuality anyway. But right now, as the economy having a little slowdown, at least little slowdown, the Fed is right now taking a sit on the sideline approach. So, however, some economists find that the Fed possibly may not have thrown in the towel yet, and there might be some rates rises. But for now, the market is taking a relief. So the dot plot tells you that Fed's collective expectations on interest rates is right now stagnating, and that's what market expects. So right here you can find that seasonality should really bolster those high moods around Tesla, with very good seasonally November and December indeed. So this heightened optimism that eventually hit the beginning of the month should prolong for a bit longer. Sorry for my voice. Anyway, we are right now jumping to the charts, and we can right here find that Tesla is right being traded at 216. And in terms of daily, we can find that we are trying to build a higher high by right now rising toward this latest lower band of this gap down, and before we'll get through this 246 bags, we need to build a bit more strength. In terms of weekly, we can find that this candle, this pin bar candle, that have a kind of a lengthened body, I'm talking about this one on Monday, is right now pushing us into a kind of a better moods, but still that's something that may not eventually reverse this latest sell-off on 16th of October. So on weekly chart, we still having some hopes that we may eventually lead to back another pathway for growth. But before we will just get through this trend line and eventually break it through, there is no hope for now for bulls, and I will be staying rather negatively positioned rather than positively. So even though many of good news are right now have been sent to the Tesla's investors. Right now, we're still finding a chart that is painting a kind of a grim picture for the company to come, but maybe that won't be a catastrophic type of events. We still having a much more like a consolidation type of a pattern than anything that may point that will start eventually pivoting more and tilting more into the north side. So if I just would haven't bought the Tesla, I will just be staying out of the position unless we'll just start to build a structure of high highs, high low. That is the most indicative way to determine that the Tesla stock may eventually lead to get to such of a better outlook for the next few quarters. All right, so we are right now jumping back to our presentation, and it's time for options. So I decided to just lay out the third Friday of the month of November. That's where the biggest players normally make their bets, make their transactions, and let's find out what's going on right here. On the put side, the open interest, the largest open interests are right now sitting at what you can find that's at $190. Whereas for open interest, we can find that right now the largest are right now at 15.77. That's the data out of the late Friday. So we can find that Tesla investors that were kind of a bearish positioned back there. Right now, the sentiment has shifted. Oh, open interest for puts is even at 200. Sorry, so it's a round figure. So 200 is the one of the point that is dividing Tesla's investors, and on 200s is right now located the biggest max pain. So we can find on the chart that was the max pain that has really converged with the major rebound on the stock. So right now that might be our defense fortress for the Tesla stock, and I do expect the stock to move like let me find out, to just fill this gap below and then move upwards once again. But if we won't manage to get through this gap within just 2 or 3 weeks, the outlook for the stock investors will eventually get worsen. All right, so we are right now jumping into the last element, that's final thoughts and Q&A. So if you have any thoughts right on about the Tesla, you may just comment it right here. So I would have a chance to get back to those comments. So right now Tesla's high valuation leaves little room for error. So it means that the expectations are so high that every single mistake out of the Elon Musk may eventually cause a real trouble for the Tesla valuation. Right now, we can find that the outlook analyzing the long-term growth prospects is showing that the market is more like in a torn apart in terms of where the stock may eventually go. The sentiment is still pointing for better times to come, but with this economic uncertainties, that will be much more difficult to build a power for the next strong leg upwards. So I'm trying to deliver you a kind of a holistic understanding of the company's potential trajectory and its impact on your investment portfolio. But if you have any questions of what I have just been said, let me know down in the comments right after the video broadcast, so I will shed light on other elements and other aspects that I find also kind of useful indeed. So for now, Tesla is getting a bit more in a trouble trajectory, even though the fourth quarter of a year is typically positive. We may have a kind of a turbulent 2024. That's why I'm steering clear out of the investment and just waiting for the clarification out of the technicality of the company. Thank you very much for